thank you everyone for joining us. This is a first installment of a series of webinars co-produced by both the Virginia International Trade Program of the Virginia SBDC program, as well as the Los Angeles network of the SBDC. So quickly, those of you who aren't familiar with the SBDC program, we're a program sponsored by the SBA and funded by the SBA, as well as other state and other resource partners. And what we do is we give free of charge technical advice to small and medium-sized businesses. And in our case, our focus in our program is giving technical advice in matters of international trade, both import and export, whether it's trade finance, whether it's international marketing, helping you understand how to negotiate with buyers and sellers. So we have a great team of experts. Both of our centers are blessed to have the kinds of advisors that we have that can work one-on-one with you, whatever your international trade needs are. Our speakers today are Simona Racek, and Simona has many, many years of experience in international trade. She's part of our Los Angeles network. She has extensive experience in trade finance, facilitating payments, working with government grants. She's one of our key people working on the STEP program, which is another SBA program that provides grants for marketing. She has extensive experience in international distribution and logistics. Our next keynote speaker is John Dunlop. I've known John for a number of years, and John is one of the experts in my mind in helping clients organize and negotiate their trade transactions, and then figuring out how best to finance those transactions, whether it's a letter of credit, open account, escrow-based lending. John has a breadth of experience in all kinds of different ways of financing transactions, and he's really perfected a great method on how to structure your trade negotiations and your trade finance. So I'm really excited about this program. I hope you enjoy it. And now I'm going to pass it on to my co-producer, Aaron Miller, with the Virginia International Trade Program.
Thank you so much, Ray, and I'm excited to be here and working with the Los Angeles Small Business Development Centers and really trying to do something different in terms of bringing our networks together and providing content for a national audience. I'm very pleased to see SBDC counselors and companies from all across the country here and quite frankly across the world sign up to participate in this, and I'm sure that Simona and John are going to make this entertaining as well as really informative and provide some lessons for you to apply to your business and your transactions going forward. As Ray mentioned, I run the International Trade Program at the Virginia Small Business Development Centers. We're based at George Mason University, so right outside of Washington, DC. And we'll be giving you an opportunity to meet a number of our international trade counselors and future programs, as well as some of our experts that we utilize from the District Export Council and other organizations here. With that said, I won't dwell too much on what we do at the SBDC, but feel free to contact me if you have any questions or are looking to get in touch with your local small business development centers. I serve as the national co-chair of the America's SBDC International Interest Section, along with Jim Foley, and we'll be able to help you navigate those resources locally going forward. And with that, I'd like to get the show going here, and I'm honored to introduce Dan Pische. Dan is new to the Small Business Administration in terms of employment, but no stranger in terms of his working knowledge of the agency and the different programs and that the way that small businesses can leverage SBA and a whole host of other financial tools that the private sector can offer. Before joining SBA, and really Dan just came on board a couple months ago, and the tail end, what we hope is the tail end of COVID. But prior to that, he led the trade finance division at First American Bank, and he's been recognized as the SBA Lender of the Year in 2017. Their bank also won the President's E Award for Export Service in 2018. So really brings a lot of practical knowledge to this policy role, and I think it's going to be a great fit going forward. So Dan, with that, I'm going to turn it over to you and look forward to your remarks.
Thank you, Aaron. As well as thank you to all of our sponsors today and for the invitation to participate. So again, my name is Dan Pische. I'm the National Director of Trade Finance at the SBA's Office of International Trade in Washington. As Aaron mentioned, I am pretty new. I like to say I'm in week 8 right now, but have spent many years successfully managing a trade finance division that actually used the SBA and their export programs as the pillar of the market that we operated in. We were First American Bank, a regional bank out of Chicago. I expanded to Florida. I'm actually in Miami currently. So last several years have been spent working in a very active trade market. My primary role with SBA is the design and delivery of our export loan programs and the management of our export finance manager staff, so a few of whom I see on the line today. So it's always nice to see them being able to attend. But at the Office of International Trade, we maintain a staff of about 25 export finance managers that are spread out throughout the country in many of the major markets. And they work closely with state and federal trade associations, as well as the SBDC network and Aaron's International Intersection group there. So what I wanted to discuss today is actually the SBA's export loan programs with a specific focus on working capital, because when it comes to international trade, working capital really is the lifeblood. And if you think about some of the challenges of the current environment, working capital has been under pressure. It's been under pressure both from a credit availability standpoint, that credit standards are higher, working capital is not flowing the way it maybe would have in late 2018 or early 2019. And payment terms are being extended. So what that essentially means is that the longer the payment terms, the bigger the facility necessary to warehouse those orders. So at the SBA, we maintain 3 core international trade products geared for working capital. We have the Export Express program, which is a revolving credit facility up to $500,000. I think it's best for emerging exporters and can be used as a springboard, if you will, to larger and more sophisticated working capital facilities. The Export Working Capital Program, or eUCP for short, is our second program. It's our flagship product. It handles everything from working capital perspective, ranging from purchase orders through more traditional asset-based lending. And it also allows for the issuance of letters of credit with reduced collateralization. I think the eUCP is the flagship because it covers such a diverse range of uses. You can take a company who's new to export and requires financing or access to capital earlier in the cycle and actually structure the loan to advance funds based on a purchase order, which allows for the payment of a vendor so that those goods can be shipped and ultimately invoiced. When they're invoiced is when a bank is going to consider it lendable collateral and would then put it into a borrowing base. So you can actually use the purchase order function as a way of jumpstarting an export market, whether it's a new buyer, new market, or just a new business, before ultimately transitioning to more of an asset-based product, which is probably the lifeblood really of commercial C&I lending. It's the backbone of it because it provides scalable and predictable financing. It's based on a formula of most commonly accounts receivable and inventory. And as a result, it allows a lender to extend a larger amount of capital, maybe a greater amount against the pool of assets, with the intention that it scales. So as the company grows, the line grows with you. As business slows, the line pays down. So from a lending perspective, from a credit perspective, it's very appetizing. And finally, we have our international trade loan. This is more of a term product, but that can be used for everything from facilities expansion through M&A transactions, even business acquisitions are recently added as an eligible use. One of the more interesting uses of the international trade program is actually the use of permanent working capital. So the ability for a business to obtain a term loan that is used to provide liquidity to the business to fuel orders, but it doesn't tie the payment of that loan to the turn of the accounts receivable, as a traditional line of credit would or an asset-based facility would. Rather, you take those payments, you spread them out over a handful of years. With a steady monthly payment, you continue to recycle and reinvest that money in the company. And for growing companies, it can be a really effective strategy for effectively growing the balance sheet of the company to allow it to get to a point or a size where some of the additional products, such as the asset-based ones, really can have more of an impact. So the products are flexible, adaptable, and we work with a national set of lenders with the international trade products, and our export finance managers again are great resources for both evaluating and considering how these loans might be able to assist your business, but also putting you in touch with our lending counterparts, as well as other counterparts within the federal and state governments who have the ability to assist growing exporters. So, with that in mind, I do want to highlight just a couple ways that, frankly, I use the program during my lending days, because I think it helps demonstrate the flexibility of the program. So there was a company who was a frozen food exporter that I was working with for many years. They were a younger company when we began financing them. They moved off of factoring onto the eUCP structure on a purchase order basis. So factoring is effectively a sale of a receivable. It's akin to receivable financing, but a way for a business to generate capital by creating an account receivable and selling it to a factoring company for a discount. So to mirror that model, we started with a purchase order basis. A little more cumbersome, a little more intense, but allowed us to extend more capital on those pre-account receivable orders. They were able to pay their vendors prior to shipment, release the goods, eventually build up a pool of accounts receivable. Once they reached a point where we thought there was enough recurring accounts receivable, we then migrated the line of credit over to an asset-based structure. So they were reporting to us on a monthly basis as we got started, and they would set their ineligible accounts receivable and payables for the period, and would revolve within the line on a regular basis. And then ultimately, they as they grew, as years went by, they graduated. They moved off of the SBA product and onto a conventional structure, which provided a little more flexibility as well. And when I think of what the SBA's role is in international trade, I think the greatest success we can have is the day that our program is no longer used. And it seems somewhat counterintuitive, but it means that we did our job. It means that we helped that company build their balance sheet, catalyze their international growth, support them during the stage where a little more, but ultimately got them to the point where they could work directly with their banking partner to obtain the working capital facility that they needed. And that is, one of the messages that we're trying to promote, is that we're here to help catalyze growth, to help support international trade, and ultimately to help graduate that business to the next level. I know we're talking a lot about letters of credit today. One of the areas that the export working capital program is also used for is actually with the issuance of standby letters of credit. So we saw this actually uptick even prior to COVID, but as companies, think of a manufacturer who's receiving a large deposit, as they were negotiating contracts, the buyer wanted some assurance that there would be performance, and if the company was unable to perform, that their deposit was not completely at risk. And one of the more innovative uses of eUCP is actually to you issue a standby letter of credit and advance payment guarantee against that deposit with as little as 25% of the collateral that would normally be required. So what does that do? It leaves up to 75% free to help fund working capital, and frankly creates a more affordable and cheaper financing option for the business, because the cost of establishing a loan and a letter of credit is cheaper than borrowing costs. So you're actually able to finance the early stages of those projects at a lower cost as you then work towards future installments. So I think I wanted to highlight just two examples, because I feel like that real world examples are the best way to highlight the technical uses of a program. And I think focusing on financing is important early to the extent it's needed, because I think it ultimately allows the business to put themselves in the best negotiating position when either onboarding a new client or negotiating a new contract. If you know as a business what can be financed, how it can be financed, and how you can leverage that infrastructure, I think you're more able to effectively negotiate contracts and ultimately work with a lender on the financing side. So with that in mind, I again thank you so much for the time and the invitation to be here. I will pass it over to Simona to take the next leg of the discussion.
Thank you, Dan. We appreciate you joining us today and sharing your experience with us, especially your perspective from the lending side. Congratulations on your new role. Thank you, Ray and Aaron, for your leadership in trade and for encouraging this important collaboration between Los Angeles and Virginia SBDC. Today, we'll be discussing the impact of technology on trade and how to manage your trade transactions online under the ICC e-rule guidelines with new technology. I'm interviewing John Dunlop today. John is a San Diego and Imperial DEC member and the Director of Operations at ITF Global Limited. He's responsible for managing the company's online trade transaction management team. The ITF mission is to expand online trade finance management to every importer and exporter worldwide under ICC e-rules guidelines. I met John when I needed a solution to structure a complex trade transaction for one of our SBDC clients. And as a district council member, John advised and helped find the solution we needed. John, thank you for joining us today. I have many questions for you prepared. And I would like to start with, what does trade means to you?
Thank you, Simona, for having me today. Trade is about trust and building authentic relationships. If managed correctly, a seller can be sure of getting paid from his buyer for his shipped goods. However, the only practical assurance of getting paid is to follow his established transaction guidelines that have been developed, refined, and practiced over the years.
I couldn't agree more, John. Trade is about trust and about building authentic relationships since the beginning of time. Tell us, when did you start your career in trade?
Well, first of all, I do not have a banking background. I am by profession an aerospace engineer specializing in jet engines, first with the U.S. Army and then with several airlines. I left aerospace in 1992 when I was asked to help found a company to manage trade transactions. I was hooked. I sold the company in 2000, but stayed in trade finance. I published a global business model for managing international trade from the importer and exporter viewpoint instead of the banks. It has been updated a number of times to comply with the International Chamber of Commerce e-rules for electronic documentation.
Could you tell us in one sentence, what is your vision for the future of trade?
I see trade moving from paper to the internet using digital documents. The timing is right, with new technologies coming online to include Starlink, Zoom, ICC rules, and trade finance platforms.
This is going to be a great conversation today, John. Given your long history in trade finance, please break down for us the trade finance definition and trade finance payment methods.
Okay. Generally speaking, trade finance deals with the various ways a seller can receive payment for goods and services from a buyer after shipment. Payment is given in exchange for transport documents representing ownership of the shipped goods. There are three payment methods that a seller and a buyer can select for their transaction. The first payment method is a credit. the credit is paid to the seller upon shipment by a third party holding the buyer's funds in escrow. The second payment method is a collection. A collection is paid to the seller upon shipment directly by the buyer to the seller. The third payment method is open account. Open account is paid to the seller a period of time after shipment directly by the buyer, usually 30 or more days after receiving the goods. Trade finance includes the first two of these three payment methods, credit and collection. With each of the two trade finance payment methods, the actual payment is made in exchange for documents which evidence movement, value, content, and quality. These documents are represented by bills of lading, invoices, packing lists, and inspection certificates.
You mentioned evidence. Do you mean proof of movement, value, content, and quality?
No, I mean evidence. The word proof is not applicable. These documents are evidence of movement, value, content, and quality. They are not proof in the legal sense. Also, it should be understood that the term trade finance is not applicable either. Trade finance is a cash business. The buyer pays cash, the seller receives cash, and everyone in between passes the cash along from one entity to another.
Trade finance is a cash business. We'll keep that in mind. Next, please define an international trade transaction and why is it seemingly so complicated?
A single transaction becomes complicated because of the numerous entities, people, and documents involved to make it happen. Let me explain. Every transaction involves at least 12 or more entities that include buyers, sellers, manufacturers, freight forwarders, carriage companies, just to name a few. In addition, the average transaction involves 24 to 27 documents or tasks that have been generated by these services to include bills of lading, invoices, packing lists, inspection certificates, and many more. Not all these documents are needed for payment. Many are for customs clearance and local law requirements.
So a single trade transaction consists of 12 or more people and entities and 24 to 27 documents. This being true for a single transaction, please give us the global picture.
World trade between 175 countries generates $10 trillion traded annually. Tens of millions of credit and collection transactions, 11,000 banks on the system, all generating $40 billion in bank revenue annually. Each individual transaction requires the same entities, same people, and documents previously mentioned. This paper documentation generates 4 billion original pieces of paper moving continuously around the globe each day.
How has COVID-19 impacted global trade?
In the first few weeks of the COVID-19 pandemic, over 1 million containers were in demurrage awaiting paper bills of lading needed to clear customs. These were delayed because of the airline courier service being shut down.
The number that stayed with me, John, is 4 billion original trade pieces of paper moving around the world each day. Tell us what solution we have as trade professionals to change the way we do business. How is technology impacting the state of trade?
Technology is flattening trade's complexity by reducing the barriers of time, cost, confusion, and access. Flattening means making trade simpler, faster, cheaper, and more available to everyone, everywhere.
Sounds great, but when is this going to happen?
Well, this is the exciting part. The technologies actually arrived last year in 2020. They will gain traction and proliferate during 2021 as the world's trading community of importers and exporters and freight forwarders become aware and start using them.
So let's talk about the hardware and the software technologies and how can they be accessed?
There are 6 technologies that are impacting trade. These include global internet broadband, global broadband video, ICC rules for electronic documents, commercial non-bank credits and collections, universal trade transaction guidelines, and finally, fintech trade platforms for managing transactions online. Each technology in itself is evolutionary. but working together in concert, they will revolutionize trade. Companies that have never traded before will now be able to.
So let's dive into these technologies that allow the revolution of trade. Tell us about Falcon 9, the Starlink satellite constellation, and the importance of internet global broadband for trade.
Starlink is a satellite constellation now under construction by SpaceX, a California company. It provides high-speed broadband access directly to customers all over the globe from space satellites. Their mission is for worldwide coverage, especially where the internet is not available or not high speed. The Starlink Gen 1 constellation will consist of 12,000 satellites in low Earth orbit. These provide 150 megabyte download and 20 megabyte upload speeds with less than 50 milliseconds covering the entire globe. Starlink Generation 2 constellation will consist of an additional 30,000 satellites. And as of January 2021, there are 1,000 satellites already launched and commercial service has already begun for high North American and European latitudes.
So this means that every party anywhere on the planet involved in trade, importer, exporter, freight forwarder, manufacturers, custom brokers, carriers, will now have direct access to high-speed internet before the end of 2021. This is a lot of information, John. Let's show our attendees what we are talking about.
3, 2, 1. Liftoff of the Falcon 9.
Vehicles pitching downrange.
Stage 1 prop is nominal. Stage 1 entry startup. Stage 1 is transonic. Stage 1 landing weird startup. Stage 1 landing leg deploying.
Falcon 9 has landed.
That's great. So Falcon 9 takes 60 satellites into low Earth orbit at the time. This is fascinating, John. I've been watching some of the launches. So let's talk next about the implication of Starlink satellites for trade.
Just as a side note, those are actually the 60 satellites we'll be using for delivering broadband worldwide with this program. I've been watching many of the launches too. Everyone globally will have access to high-speed internet. This means access to high-resolution video and cloud trading platforms. It also means peer-to-peer trade capability will be available to everyone worldwide. Electronic documents make it possible to share and edit documents during video conferences. Platforms will allow exporters to bypass their in-country commercial banks and deal directly with their buyers for credit, collection, and open account transactions. By presenting electronic documents instead of paper, exporters will be able to reduce the average 24 days to 24 hours for credit payments while cutting or eliminating bank fees altogether.
How impressive that now credit payments can be reduced from 24 days to 24 hours. Why is the video function so important to online trade?
70% of communication between people is visual. The remaining 30% is audio and written. English may be the predominant language of international business, but is not normally the first language of a counterparty, and misunderstanding often arises. For example, many cultures, it is impolite to say no. Thus, they always say yes, even if they want to mean no. The person being polite often provides visual clues that his answer is not the intended answer. High-resolution broadband video goes a long way to bridge this cultural gap, which in turn builds transparency and trust. This increase in trust with face-to-face involvement between the parties goes a long way to reduce the difficulty of a trade transaction.
So technology increases trust, between the parties and reduces the complexity of a transaction. So Zoom, for example, can now help solve the difficulty of structuring a trade transaction?
Yes, the video call provides a simple solution for the complexity of managing a trade transaction. Ideally, in the call should be the buyer, seller, freight forwarder, and trade finance person. The organizer only needs to send out an online meeting invitation that is coordinated for time zones to the various parties. Within moments of the parties coming together on a call, they become a team and start working together toward the common goal of making trade happen. Digital documents, such as the purchase order or bill of lading, may be shared and edited online by any of the participants.
So instead of sending 100 emails and making 50 phone calls, now all the parties will meet here on Zoom to negotiate a transaction. The fact that I'm able to see your face and somewhat read your body language helps build trust and transparency. The conversation up to here was just setting us up for the next topic. So please make sure to take a sip of water and be present for the next part of our conversation. We're just now getting into the technical side of online trade. John, let's assume that we have the PO and let's take the transaction online. What are the guidelines for using electronic documents instead of paper?
The new guidelines for electronic or digital documents are called e-rules. And these are published by the International Chamber of Commerce for the presentation and payment of negotiable documents as electronic records instead of paper. These rules apply under eUCP 600 for credits and eURC 522 for collections. The formal name for e-rules for credits is the International Chamber of Commerce Uniform Customs and Practice for Documentary Credits, Publication 600, Supplement for Electronic Presentation, version 2.0, effective 1 July 2019, or in other words, the eUCP. The formal name for e-rules for collections is the International Chamber of Commerce Rules for Collections, Publication 522, Supplement for Electronic Presentation, version 1.0, in effect 1 July 2019, or the eURC.
So we are talking about two ICC e-rules. eUCP 600 Supplement 2.0 for credit and eURC 522 Supplement 1.0 for collections. What are the most important highlights of these new electronic guidelines?
The most important highlights for both of these new guidelines include, first, electronic records may be presented alone or in combination with paper documents. Second, a document shall include an electronic record and/or a paper document. Third, the place for presentation for negotiation may be an electronic or a physical address. And fourth, sign and the like shall include an electronic signature. Electronic record documents may be presented in any format, such as PDF, unless specifically specified. A presentation requires a notice of completeness, which is a new document requirement. And seventh, and probably the most interesting and important, any requirement for presentation of one or more originals or copies of an electronic record is satisfied by the presentation of one electronic record. These guidelines now provide for letter of credit and collection presentation to be submitted with electronic records that are now interchangeable with paper documents. One electronic record now replaces the original paper document and its copies.
Side note to our attendees, you will be all receiving a copy of the presentation, so you don't have to take notes. John, let's talk about how these new electronic guidelines apply to trade transactions.
There are many benefits for applying e-rules. They include millions of export credit and collection presentations for payment can now be sent as email attachments. Payment time for export credits can be reduced from the world average of 24 days to 4 days. Payment time for export collections can be reduced from the world average of 14 days to 4 days. Original hard copy documents do not have to be returned for reissue while demurrage piles up. Air freight shipments can use credits in addition to collections as a payment method. Amendments are handled with email attachments instead of SWIFT messages. Bank service fees can be reduced because the need for a negotiating bank will be eliminated. To say nothing of the number of trees we can save in Romania.
This is great news, John. And please, let's save the trees in Romania. Deforestation is a big problem right now in my native land. So the cost of trade for both exporters and importers will decrease. How are the new e-rules going to be implemented in the global international trade community? Are commercial banks going to implement them, and when?
Well, Simona, banks have not implemented e-rules. This has been the case for the past 18 years. They were first introduced in April of 2002. However, there are many fintech platforms like the ones in this slide offering faster, cheaper, and more accessible services once in the sole purview of banks. Services such as invoice discounting, purchase order and receivables financing, acceptance purchases, and pre-shipment financing.
This brings us to your vision to bring trade to the internet using these new technologies. Tell us about your company as an example of a trade fintech.
ITF Global provides online trade management services to importers and exporters. We manage trade transactions by bringing together the buyer and seller into a Zoom video conference with one of our trade management specialists. Together, they share a single M2 platform with all the basic trade transaction document templates. These trade document templates are embodied in the Global Business Model, or GBM, as a common international business method. The M2 brings together the parties to the transaction at the same time while sharing documents needed for the transaction. These documents can be edited in real time to reflect what the buyer and seller agree to, such as Incoterms, price, quantities, payment method, and delivery schedule. The Global Business Model is a common trade management method that is used between the parties. The manual's trade document templates are linked into the M2 platform. Typical trade documents include bill of lading, invoice, packing list, certificate of origin, and any other documents called for in the issued credit or collection facility.
Who manages this process, and how is the M2E platform structured?
The M2 process is managed by our trade management specialists who are responsible for the content and editing of each document. The trading partners do not fill out forms. The M2 platform is a graphical user interface, or GUI, for each transaction we manage. Each M2 is unique to a single transaction, referred to as a case. The M2 is the tip of the iceberg, linked to the underlying databases that support the transaction, include the parties to the transaction, the basic 24 plus document templates or tasks that are intrinsic to every trade transaction, a case sheet tracking the transaction date log of events, the exporter and importer member information, recording capability for critical agreements, online access to the documents during the process, the ability to add tasks and documents specific to the products and services traded, and finally, final negotiable document set to be presented for payment.
And what features on the M2E platform allow electronic documents to be used instead of paper?
The platform document templates adhere to e-rules for electronic records to equal original paper for the same purpose. Each document represents a task in a trade transaction. As mentioned earlier, some documents and tasks may be combined, such as the buyer and seller agreeing on the terms of the purchase order without going through the request for quotation and quotation process. Each global business model template contains a checklist of needed information to complete that task.
That's great help. Please give us a few examples of the M2E platform built in e-rules.
Some examples include bills of lading and airway bills are consigned to the buyer. This renders the transport document non-negotiable and eligible for payment in a PDF electronic format. The M2 platform uses electronic documents for payment. Most countries, 172 out of 175, still require hard copy for customs clearance of ocean shipments, such as required paper originals are sent to the buyer and the shipper after payment. One electronic document suffices for an original and copies. A new document called a notice of completeness is required for each electronic presentation in lieu of a cover letter. Each transaction or case has a unique M2 platform associated with it. All the documents associated with that case are shared with the principals involved with the transaction. The M2 graphical user interface acts as a firewall between the principals and the actual files so that they may not be unilaterally changed once agreed to.
Are there any other requirements that buyers and sellers must meet in order to use the M2 e-platform?
Yes, Simona, there are. And these have to do with communication and common sense. We require principals involved with any transaction to become members of our community and go through due diligence with company information and directors' passports. We require visual communication between the principals to increase transparency and trust. As mentioned, a communication is 70% visual. We also require the principals to follow the global business model method and adhere to UCP and eUCP guidelines as we do.
Am I understanding correctly that your due diligence process applies to both the buyer and the seller? And can you elaborate on what the due diligence process entails?
Yes. All parties to a transaction must provide due diligence documentation and sign a membership agreement. Due diligence has become a universal requirement for everyone as trading moves online. These documents include passports, bank statements, company registrations, address verification, and source of funds information.
The due diligence and the M2 platform sounds like a lot of forms to fill out, John.
No, Simona, that is a misconception. First of all, our trade management specialists and associates are the ones filling out the trade transaction documents on behalf of the principals. Second, 85% of the information in a transaction does not change. The buyer and seller's name and contact information doesn't change. The goods description, the specifications, and the ports are the same. Only editing is needed as the transaction progresses from request for quotation all the way to final payment.
I'll take that. What are the implications of a platform like M2E platform for the future of global trade?
Someone once said you can be part of the problem or part of the solution. The M2 platform is just one solution. There'll be many variants of M2 platforms in the future that bring together buyers and sellers with global internet and video. However, they will all embrace universal e-rules and share documents online with visual communication.
I understand that the global business model manual and document templates are available to everyone to download for free from your website. Is that correct?
Yes, it is. Our technology is open source to everyone worldwide. Our company embraces the same vision as the SBDC, the SBA, the EDC, SpaceX, Starlink, Zoom, and the International Chamber of Commerce. Open up trade and economic opportunities for everyone. Our services are free of charge to exporters.
At the present time, commercial banks are not issuing letters of credit under these new ICC e-rules. Is this going to be a problem in 2021?
No, Simona, this is not going to be a problem. Fintechs and commercial companies can issue documentary trade credits, or DTCs, which is a trade alternative to a bank-issued letter of credit. It is issued and managed under UCP 600 guidelines. The UCP is universally believed to be a bank standard. It is not. The International Chamber of Commerce in Paris, France, first published the UCP in 1933. Soon after, the world's banking community adopted it as a standard. It is also believed that the UCP is a regulation or law. Again, it is not. UCP articles are guidelines that any company may choose to apply to its trade transactions as a method of payment and title transfer.
I'm learning new things today, John. So any company could issue a credit under the UCP guidelines?
Yes, as long as they do not call it a letter of credit, which is an internationally protected word. The same as the word bank or finance should only be used by a registered bank or a registered financial company. You must be a bank to use the word bank in your company name. And only a bank can issue a letter of credit.
So then a fintech and commercial companies may issue documentary trade credits, what you call DTC.
Yes. Fintechs and companies today may issue documentary trade credits under UCP guidelines, trade being the term for a commercial company. When a bank issues a documentary trade credit under UCP Supplement 2.0, they're able to take advantage of the internet speed. Electronic documents can be sent as email attachments, which is obviously faster than paper being sent by courier services such as FedEx or DHL.
It is important. Please describe a documentary trade credit to us.
A documentary trade credit, or DTC, is an alternative for a bank documentary letter of credit. A documentary trade credit is issued and negotiated under the same UCP guidelines as a letter of credit. The documentary trade credit is settled using electronic records via the internet instead of paper. The documentary trade credit is the future of trade credit settlement between buyers and sellers.
So documentary trade credit, DTC, is an online trade alternative to a bank issued letter of credit. How do you structure a documentary trade credit transaction?
A buyer and seller agree on using a documentary trade credit as the payment method. The buyer's funds are put into escrow under contract with an international escrow company designated for the subject transaction. A documentary trade credit is issued to the seller, who becomes the beneficiary of the DTC. The DTC facility is issued in MT700 SWIFT format, normally used for a documentary letter of credit. However, the availability of funds for the DTC, found in paragraph 41D of the MT700 message format, is with the international escrow company instead of a commercial bank. The credit is examined and negotiated under UCP guidelines. Electronic transport documents are released for printing after the seller receives the money. The original paper documents are sent to the buyer via courier after payment for inbound customs and clearance if it's required.
So you're saying that the electronic transmission of a DTC, documentary trade credit, allows you to eliminate both the advising and the negotiating bank functions, plus the requirement for document courier is also eliminated. That is how the time for payment is now reduced from 24 to 4 days. So what is the impact of DTCs in the global landscape?
Worldwide, only 8% of international transactions are actually settled with cash-backed letters of credit. However, UCP guidelines are the foundation for all trade transactions, regardless of the payment method. The documentary trade credit is poised to become a viable alternative to a letter of credit. The documentary trade credit is fast, simple, and low cost.
And how many banks do we need for a documentary trade credit transaction?
None, Simona.
No banks. I wonder, why can't commercial banks offer credit under the new eRules guidelines then?
They can, and hopefully they will in the future.
So John, I recall you've mentioned that 8% of international trade uses the credit payment method. Tell us about what payment methods are used for the remaining 92%.
Remaining 92% of non-credit payments are done by the collection payment method. The collection is done by presenting the transport documents to the buyer for his purchase and payment to the seller. The documents represent title and at least include the bill of lading, invoice, and packing list.
Do ICC eRules apply to collections as they do to the credits?
Yes. The International Chamber of Commerce Uniform Rules for Collections, better known as the eURC 522, governs the practices used between all banks and trading partners for managing documentary collections. The eURC 522 Supplement for Electronic Presentation version 1.0, or eURC, provides the e-rule guidelines for using electronic records in lieu of and in conjunction with paper documents.
What's the alternative instrument for online collections that can be used in lieu of paper-based bank instructions?
The alternative facility is a documentary trade payment.
This is a new instrument I've not heard of. Please describe to our participants what a documentary trade payment is.
The documentary trade payment meets the e-rule guidelines under eURC 522 and its supplement version 1.0 for electronic presentation. A documentary trade payment, or DTP, is an alternative for a bank documentary collection, or DAP. However, it is managed using UCP 600 guidelines instead of the eURC 522. In this way, the collection instructions are conveyed in MT 700 format, which is more formally defined than collection instructions. The documentary trade payment is the future of trade collection between buyers and sellers. The cost to the exporter is zero because there is no collecting or presenting bank to pay fees to. A documentary trade payment is fast, low cost, secure, totally electronic, and without any commercial bank involvement.
So what's the difference between the bank's documents against payment facility, DAP, and documentary trade payment facility, DTP?
A commercial bank's documents against payment, or DAP, presently requires paper originals. Documentary trade payment, or DTP, is totally electronic. The bank DAP averages 14 days from shipping date to payment, whereas a DTP only needs 4 days.
So you have control of the title of the goods as an exporter. And because you now have the ability to present the documentation online, you can get paid in 4 days, and that's how your cash flow management improves. This is clever, John. So banks use eURC 522 for DAP, but you are using eUCP 600 for DTP. Interesting. What is the implication globally of this concept?
The documentary trade credit facility could be used online with 8% of global transactions that are now done with cash-back letters of credit. The documentary trade payment facility can be used online with the remaining 92% of global transactions that are collections or open accounts. The simplicity of the DTC and DTP concept is obviously elegant. The documentary trade credit and the documentary trade payment facilities are the future of trade settlement between buyers and sellers over the internet.
So what we have discussed today is that 100% of international trade transactions can now be done over the internet between buyers and sellers without using commercial banks. Starlink satellites, Zoom, eRules, the DTC and DTP facilities provide the technology infrastructure for goods to be bought and sold securely, fast and less expensive over the internet. The future of trade is happening now in 2021.
Yes, it is, Simona.
How quickly, John, will the world become aware of this new infrastructure of taking trade transactions online?
It depends how quickly this video goes viral.
Well, let's keep having the conversation, John. Just let me know when you're ready for the next webinar. And here's John's contact information. As a San Diego DEC member, John is available to answer all of your questions about internet trade finance. If you are in the Los Angeles region and need international trade technical assistance, please contact the LA SBDC Global Department at 310-981-3605 or visit our website listed on the slide. If you are in the Virginia region, please contact Virginia International Trade Program at the link listed on this slide, or just Google Virginia International Trade Program. If you are outside of Los Angeles and Virginia, please go to the link shown on the screen to locate your local SBDC center. And now we will move into a 30-minute Q&A session. In order to ask questions, please go to menti.com and use the code 6858889. And I've seen several questions coming up, so let's find out. John, our first question is, why do air shipments not use letters of credit?
Letters of credit take an average of 24 days from the shipping date until payment. Air freight terminals have no practical way to store containers for a month. With an expedited documentary trade credit negotiation, this now becomes possible.
Thank you. Our next question is, who examines the DTC and DTP documents and determines if they comply or have discrepancies?
A certified documentary credit specialist from the London Institute of Banking and Finance or equivalent. The examination report is presented to the buyer for his authorization to release the funds to the beneficiary or not.
Interesting question. Can cryptocurrencies such as Bitcoin be used with DTC and DTP?
Bitcoin can be used with a documentary trade payment because the transaction is peer-to-peer between buyer and seller. Bitcoin cannot be used with a documentary trade credit because a third party is involved in the transaction.
Great question. Can blockchain be used with DTC or DTP?
Yes, any format is allowed under ICCE rules that the parties agree to.
Next question. Can my commercial bank issue letter of credit and collection under the ICCE rules today?
Yes.
Short answer. Do I still use my bank to transfer funds to the seller?
Not always. Fintechs such as TransferWise are expanding their services. And if you're buying a Tesla Model 3, you can use Bitcoin in the near future.
Is the M2E platform secure?
The most unhackable and secure protocol is face-to-face confirmation of data. This is one of the reasons we insist upon video communications.
Can the GBM platform documents be used by anyone, or is there a fee?
No, there's no fee. They're open source from our website to anyone who wants to use them.
Thank you. Are agreements between buyers and sellers recorded?
Only with their permission and only at critical points in the process, like agreement on the purchase order.
Permission from all parties?
Yes.
We still have 9 questions. Is the GBM model a universal model that can be used in a traditional trade transaction?
Yes, the GBM is actually simply a codification of the way the world does business today with invoice, packing lists, pro forma invoice, and so forth. It's not an original document so much as a codification of the way business is done today that everyone needs to follow or should follow.
Thank you. The electronic revolution described by John will apparently eliminate or sharply reduce need for fee-based services of the banks. Will banks suffer significant lost revenue or be able to offset these? Quick note to attendees, there's a character limit on the menti.com, so this question was not ended, but give me one question, John. Let me see if, oh, I have the question. Our moderator.
I can answer that one too.
But one second, I do have the ending of the question. Will banks suffer significant lost revenue or be able to offset these losses with other revenue streams from the new technologies?
The answer is they're going to have to adjust their business model. Banks that issue letters of credit and collections will now be to receive the presentation of the documents directly without the need of negotiating bank function. So it's more a change in the business model as opposed to a loss of revenue.
Thank you. Next question, is this online process available to NTEs, new to export companies?
Absolutely. The most critical part in the process is in the request for quotation and a quotation part of the method, where you actually define what the transaction is going to be and then define the payment method to make it work.
Thank you, John. Next question, can I use this method with a bank letter of credit?
Yes. The UCP and E-rules apply equally to the bank presentations as it does to a company issuing a credit. We follow the same rules.
So I could get a letter of credit from the bank and then come to the platform to structure the transaction.
Yes, and we'd be glad to manage it for you to your bank.
Thank you. Next question.
This is a caveat. With a bank issued letter of credit, they need to issue it under the eUCP guidelines so we can use electronic documents. Otherwise, you're not going to get paid for 30 days.
eUCP 600 2.0.
Thank you.
Are the online credit transactions guaranteed like letter of credit?
Now, this is a misconception. A letter of credit is not a guarantee of payment. A letter of credit is a conditional promise to pay if the documents are congruent and comply with the letter of credit requirements. That's the same requirement for the documentary trade credit.
International escrows exist now. How are they done now and how would this be different?
You're correct. International escrows do exist, but each time you create an escrow, they have unique rules at that time. We require that any international escrow company follow the UCP guidelines as we do.
Thank you. Things happen with an international transaction. How would this platform address necessary amendments?
Under the UCP, the letter of credit is irrevocable. As such, both parties must agree to an amendment. The same is true with a documentary trade credit. Both parties have to agree to the amendment.
How do I make the change? How would a party make the change?
The buyer or seller would request an amendment to, in this case, ITF, who issued the credit or collection. And then we would bring both parties onto the Zoom and they would have to both agree to the amendment. And we would record that agreement. One party or the other can't change it unilaterally.
So you said both parties have to agree and there will be recorded while they agree to the changes.
Yes.
Thank you, John. Next question. How would this method improve my existing open account transactions? If so, would it raise the cost of an open account? It's a loaded question, John.
Not really. An open account is just a collection that is paid 30 days after arrival. The process of comparing the documents to the purchase order remain the same. Either a private company can do it themselves, their accounting department, or they can retain us to do it. We obviously follow very strict rules on examining those documents. So we would provide a layer of comfort, if you will, to the company that the documents exactly match the purchase order, and if not, why not?
Can I ask a follow-up question from myself, John? In an open account transaction, I gave up the documents.
Yes.
So
they still owe you the money whether you gave up the documents or not. You technically are still ownership of the goods until they pay for them.
So I give up the documents, but not the rights to the title.
Correct.
Thank you. What are the components of the GBM platform? It seems like there's a lot of forms.
Good question. I like that one. The GBM have all the documents that would be needed in any trade transaction. However, not all trade transactions use all the documents. For instance, there's a quotation form and a request for quotation form, which may not be needed if the buyer and seller have already agreed to a purchase order. It simply is the rigorous structure of a trade transaction, and normally all the documents are not used in any given transaction.
Thank you. Next question. Does your M2 platform include landed cost calculation to assist in negotiation that includes all costs associated with country buyer is located, where the buyer is located, I assume?
Another good question. Once you have a purchase order, then you have to construct a pro forma invoice that would include freight and insurance that hopefully is the landed cost within plus or minus 5% of the estimated final invoice. So yes, we arrive at the landed cost as part of the process.
Thank you. Does ITF work with currency?
We do not handle money. We handle the documentation, and money transfers are between buyer and seller or between the escrow company and the seller.
Thank you. How does impact SBA export financing? Will LCs become obsolete?
No. Letters of credit will not become obsolete. There is always a need for a third trusted party between the buyer and seller when they don't know each other. And the SBA becomes a very important part, and they can actually join the platform and be part of the transaction if that's part of their process.
And I just want to remind our attendees that we do have Daniel Pische here with us. If you have any questions about SBA export products, please ask the questions.
And let me add something to this question too, the SBA. With the platform, all the transaction documents are available to the buyer and seller anytime during the process. So if you have 5 or 6 different transactions going at one time, and you have a question on a particular transaction, simply by linking onto that M2 platform that is unique to that transaction, you can see all the documents at any time.
Thank you. I have another longer question. I think it came from Africa. Thank you. For emerging markets like Africa, do you have a list of countries where USA exporters can export to, in particular, exporting new technology? How do you underwrite these for the USA exporter? SMBs in Africa have liquidity issues and banks do not support them.
Daniel, that's yours.
I think the SBA, we ultimately follow the EXIM country limitation schedule. So I think that's a good guidepost. I mean, when it comes to financing, we are, I guess, a partner with lending institutions. So ultimately, they're the ones doing the lending. It's their credit policies and their requirements. Our export loan programs have our own specific requirements, but it really does come down to the lending institution and both their credit appetite and risk appetite.
Thank you, Dan. So we still have some more minutes for question. We'll wait a little bit for a few more questions from the audience.
Let me digress a moment. And one of the things that going online really isn't appreciated till you're actually doing a transaction. When you're shipping your goods and you need to actually change the documentation to a new buyer or a different freight forwarder, original documents have to be returned to their origin. I've had transactions take 30 and 60 and 90 days for this all to happen. With online, using the e-rules, you can make these changes literally with an attachment to an email. So you don't run into the problem with demurrage, piling up charges while you're waiting to change the invoice or change the bill of lading.
Thank you, John. We have a new question that came in resistance to change is key. Companies still run to the traditional ways. How will the SBDC join fintech companies to enhance efficiency?
That's Daniel's.
Well, I think
Can I
that's,
pass it on there?
that's
I'm not as
Ray.
Yeah.
familiar with the SBDC side. I know when it comes to fintechs, that's an area that the SBA we have been in touch with and obviously exploring. If you look at the rollout of PPP, it included a number of non-bank lenders, and my expectation is that is another area we'll be turning to as we get through the current situation.
Yeah. I would like to emphasize that from our website, the e-rules and all the documentation goes with it, plus all the templates, are available to not only U.S. exporters, but exporters worldwide. And we'll be more than glad as a DEC organization to help any startup or any company understand these e-rules simply by giving us a call or sending us an email.
I'd like to call Ray for a comment as well.
Yeah, no problem. You know, as Dan said, particularly through this pandemic, we got involved a lot with the fintech companies, and we do a lot of research. One of the things we do at our SBDC is we're also involved in doing a lot of economic research, and we found that the fintech companies were very good at filling the gap of a lot of these companies that couldn't get financing through their banks or were shopping for financing and turned down. So I see the fintech companies as you know, giving us a new model, you know, to look at, because they're just a little more accessible, right? It's online. And so there's already a lot of work between some of these fintech companies. For example, in California, Lendistry is actually administering the state of California's grant program, and we're a partner in promoting that. So, you know, what I think is really interesting is seeing how innovative we can get in trade finance, because I think one of our attendees was talking about the need for more financing for small businesses. So I would love to see more innovative solutions on trade finance, you know, using community lenders, using the fintech companies. So, you know, what's interesting about technology is you have all these outlets that weren't there before, you know, to be able to get funds out to clients and use some of the SBA products. So I'd love to see some of the SBA international products get out in the same fashion as some of the traditional products or the disaster loan products. So I'm looking forward to that, to some of these solutions as a way of getting out some of those loan guarantees that are so valuable in the EXIM products as well.
Thank you, Ray. And I think from NT perspective, from new to exports companies, being involved in this process and understanding the 12 parties involved and the 27 documents involved, it really has been supporting to understand the landed cost and to really protect the integrity of the margins. And as an SBDC export consultant, if I get a new to export company to understand how to protect the integrity of their margins, I think I feel like I've done a good job. And I found that understanding all the process and the parties involved helps with the process of setting up the price and the cost and understanding every single check on the landed cost spreadsheet. I do see a question, I think, for Dan in the chat. SMEs often need pre-export working capital in smaller amounts than most banks want to deal with, even with an SBA guarantee, example under 100,000. This essentially denies an intended solution to the bulk of SMEs it is supposed to serve. What can be done to address this need?
I think that's a great question. You know, obviously the administrative burden with international trade is high, which, I mean, I think you have to look the bank side and why the requirements and rules are where they are. That's why we have, frankly, the Export Express program. it's an open revolving facility. The monitoring is not as intensive. With that in mind, because it's frankly difficult to handle individual pre-purchase order transactions on a small dollar basis, but we believe that the opening revolving facility is a better solution. We've talked about all the various parties and the various documents. Those all take time to review. When you look at a facility that has an interest rate cap on it, and the fact that the workload is effectively the same regardless of the size of the transaction, I think you can start to understand why certain limits are established where they are. And
let me add to that, Daniel, if I may. The average letter of credit size worldwide
traditional side of the house
is less than $400,000, but the subset of small businesses, the letters of credit get as low as 80,000 on the average. So you're just to reinforce what you said.
Sure, and I think it's a matter of using we designed a product line, the idea of it serving as almost stepping stones. You can look at international trade loan providing a form of permanent or long-term working capital, the Export Express program providing an opportunity to have a 90% guaranteed to the institution revolving credit facility that doesn't require the same transactional financing model, with the idea ultimately of building up enough size. The reality is international trade is a size-driven business. And you do need to reach a level of critical mass in order to take advantage of more flexible and ultimately more cost-effective models. And at the SBA, we're trying to come up with a bevy of solutions that kind of allow businesses to progress along that path. But I also would be remiss if I wasn't just honest about some of the challenges, and we incorporate those into our loan solutions.
Thank you, Dan. That was very important comment. We do have another question that came through. You've mentioned that the exporter doesn't pay any fees for the process. However, there are fees in the structure. Banks charge for every little step. From a pricing POV, how are fees structured?
There are no banks in our process. We simply charge a flat fee, which is listed on our website, to the importer, to the buyer. There are no fees charged to the exporter.
Interesting. I think we have one more question. No, that was the last question. I was wrong. One more question. Trade is all about following the e-records goods cache, supply chain collaboration, deliver full in time. Any views on a moderator in this regard? Take food traceability to move A to Z in the cloud. This is all yours, John.
Okay. There are companies like Teave that we can actually put a tracker within the containers that will tell you right from the internet exactly where the container is in the process or is in the logistical chain. At the same time, we have visibility on where we are in the document process to get paid. The two travel independently, but you can track both of them.
Thank you. Just to have a few more minutes. Let's see if we have any long question that couldn't make it to Mentimeter.
And just as an aside, while we're waiting for questions, everything we're talking about today isn't a hypothetical in the future. Fintechs and our company are doing everything that we mentioned in this presentation today. We are using documentary trade credits. We're using documentary trade collections. We're doing trade transactions with China, Singapore, and Croatia today.
Right, it looks like this, we don't have any more questions. So this will conclude our first LA to DC Goes Global webinar, but it seems to be the beginning of a new era in trade finance. John, thank you for joining us today. Dan, thank you for joining us today. Taking the time to break down trade transaction and ICC rules is very important for us. We appreciate you being with us today, and thank you all. Have a great day. Ray, I will hand it over to you for closing.
Thank you very much, Simona.
Great.
Thank you.
Thank you for the presentation and this information. Again, the takeaway for me is that there's required steps, and a lot of the mistakes that happen in international trade is simply not following some of those steps. It's a big checklist, and that's so important, you know, to get buyer and seller to agree to all the terms and conditions. And
as early as possible.
Right, and so many of the mistakes in trade are unintentional, right? They're errors, and you know, I think back to my old trade days where, you know, I was handwriting notes onto a fax machine, and that's how we communicated. I'm also excited about the expansion of the internet through some of these technologies, because again, it's, you know, why can't we track goods worldwide door to door? Because we simply don't have the connection to do that. So there's a lot of really interesting things happening in trade. And, you know, I always kind of joke that, you know, if we brought a doctor from the Middle Ages and brought them here today, they'd be lost. But if we brought Magellan back, he'd probably know how to do trade. He'd know what a bill of lading is, and it's pretty much the same documents. Learning curve would maybe be 6 months. So we really need to look carefully at the technology of trade, and there's a lot of innovative stuff going on, and hopefully those innovations are really going to help democratize trade so that the small business, the new to exporter, can enjoy the advantages of being global in a market. And we know that companies that conduct international trade, they live longer, about 8 years longer than their non-trading counterparts. They grow by a factor of 4 over their non-trade counterparts, and we know they're very innovative. So so those are the kinds of firms that we want to promote, ones that increase jobs, increase economic impact. So I'm glad you could help with this discussion about the future of trade, and I hope that we'll hear from some of the attendees, and hope that either our Los Angeles SBDC or our Virginia SBDC can help in that journey of helping our exporters bring their goods and services throughout the world. So
well
very
said,
excited, and thank you, everyone.
Well said. Thank you very much, Simona. Been delightful.
Thank you, John. Wishing you all a great rest of the day.
Thank you.
Take care, everyone.